And I'm John.
And this is Tax Chats with Silvos. So on our last episode, we started the discussion about the Wayfair decision. And today we're going to talk about Nexus, which is not a new word, but something that's affecting us all because of the Wayfair decision.
That's absolutely right. Nexus is really the crux of the Wayfair decision. Prior to the Wayfair decision being handed down in June of 2018 by the U.S. Supreme Court, Nexus was defined as a physical presence in the state, which simply meant a taxpayer that had a warehouse, had sales reps, was mailing literature into a state, would have to remit sales and use tax for any transaction that occurred in the state. With the advent of e-commerce, there were a lot of challenges to those rules, and this past summer, Wayfair was handed down, which says if you have an economic presence in the state as opposed to a physical presence, you must remit sales and use tax. So in order to meet that, how do you know whether or not you have an economic presence? Well, there are some loose definitions currently. They'll solidify themselves over time, but the general rule of thumb across the 50 states are if you have $100,000 in sales, or 200 transactions, you'll have to collect sales and use tax. What that means is you must collect the money from those that are buying from you, you must populate returns, and you must remit them back to the taxing authority because you now have economic nexus in the state.
Absolutely. And this is really important to know because 25 states have already gone live with Economic Nexus. And that's just in the last 3 months. And come January 1st, we're getting 6 more states that are going to go live. And those states are Georgia, Nebraska, Utah, Iowa, West Virginia, and Louisiana. And Louisiana is already complex, a state without having to worry about if you have online sales, right?
Yeah, Louisiana is a very complex state, and there are 2 other states to note, New Mexico and Florida, that never had a definition of nexus in their statutes. Since they're developing those ab initio or from the start, it might be very advantageous to start to monitor those states to see how they're defining nexus. But rule of thumb, once again, is if you had physical presence in the state previously, you still have nexus in the state. You may have additional economic nexus, but you have it. Nothing's changed. So you have to look at the dollar volume. You have to look at the number of transactions. Lastly, if you were exempt from filing sales and use tax because of the nature of the goods or services that you were transacting in prior to Wayfair, you're still exempt. Nothing's changed. An exemption is an exemption.
Absolutely, John. And I know on our last episode, we also talked about if a company should wait and see, because we have heard companies have the wait and see method. And one thing that jumped out to me when we're discussing this is that they really shouldn't be, because the only state that's given a grace period right now is Colorado. That's the only state. And they've only given a grace period through the end of March. So they said you don't have to collect taxes, but you still have to report.
Yeah, very good point, Erica. So really the question now becomes, you know that you may have to file an estate based on your dollar volume and your transactions. What steps should you start taking to become compliant? It's unlikely that if you were a smaller vendor or medium-sized vendor in an e-commerce platform, you had the infrastructure to be able to collect those taxes and remit. It's a good time to start investigating software and automating that sales and use tax function. Automation does a couple of things for you. One, it identifies where you have that nexus, will tell you where you need to remit and tell you how much you need to remit going forward. Secondly, many states are going to see taxpayers filing for the very first time in that state. And as in all cases where there's a de novo filing, the state taxing authority will look and say, why didn't they file before? The increased likelihood of audit upon a first-time filing is higher than at any other time. It doesn't mean you haven't filed correctly. It just means you've gotten the notice of the jurisdictions. The point being made is software automation sales and use tax function allows you to document everything you're doing, provide a defense, and also allow for a seamless introspection or examination of the data that went to your sales and use tax return. So you may have been looking at automating the sales and use tax function. Wayfair at least should expedite your examination thereof.
Absolutely, absolutely. And although it's the holiday season and we're all on vacation or going on vacation, the big thing that jumps out is that tax isn't going to stop because we're on vacation. We're going to come back from vacation at the first of the year and we're going to still have a responsibility. So we really wanted to just let you guys know this information is out there. let you know that we still have to get it done, and make sure that you're informed so that you know what's about to happen.
Yeah, an ounce of prevention is worth a pound of cure on this one, absolutely, with Wayfair and Nexus.
Absolutely. So thank you for joining us today, guys. We're going to let you get back to your family. Merry Christmas. Happy holiday. I'm Erica.
And I'm John.
And this is Tax Chats.